Okay, we're live. Today we're going to be reading good old Dario. In the past months, I've been documenting the slow motion train wreck in the physical silver market, the draining vaults, the explosive lease rates, the widening chasm between paper price and physical reality. Many of you have followed this journey, watching the puzzle pieces accumulate. Today, those pieces lock into place, revealing a picture of such staggering manipulation and systemic risk that it leaves no doubt. The silver repricing is entering its final phase. The events of late January, the vertical price rally to over $120 US, followed by the orchestrated 40% crash on January 30th, were not random volatility. They were the desperate, coordinated actions of a cartel of bullion banks caught in a naked short squeeze of historic proportions. A multi billion-dollar heist in broad daylight to save themselves. It has only accelerated the inevitable temporarily. The 2022 London Metal Exchange nickel squeeze, which saw prices double in 24 hours and forced the exchange to cancel billions in trades, was not an isolated event. It was the prototype of what can happen at any moment now. The same broken system of paper promises piled up atop non existent physical metal is now poised to detonate in the silver market with consequences an order of magnitude greater. The illogical chart and the systemic heist. It all starts with this single chart, courtesy of Bullion Vault, with an illogical title that at first puzzled me. Here's the title: Silver Crash Sees London Bullion Get Tight Again. It helped me unmask what truly happened behind the scenes of the silver paper market and get a better picture of what's going on or what's going to happen in the near future. In late January, as silver prices screamed from 72 to 121, we got to track this the whole way through. We know the story. A critical metric that should have moved in lockstep did the opposite. The silver lease rate, the fundamental cost to borrow physical silver bars, collapsed to zero. This makes no sense in a functioning market. Soaring prices amid reported physical scarcity should have sent lease rates, the true pulse of physical tightness, soaring alongside them. Instead, they flatlined a physiological impossibility for a market supposedly in a fever of demand. The reason for this paradox is where the story turns from finance to forensic investigation. The physical silver needed to temporarily calm the market and settle expiring contracts did not come from a mine, a refinery, or a willing seller. It was, in essence, stolen from the last remaining reservoir of accessible bullion in the financial system. We're here. The theft vehicle was the iShares Silver Trust, the world's largest physical silver-backed ETF. Oh, those good old ETFs, eh? Let's do it with cryptos, shall we? On December 22nd, consider the timeline. On December 22nd, the SLV held approximately 590 million shares outstanding, each representing a claim on 0.9 ounces of physical silver. From that date, through the violent price rally as exchanges from Chicago to Shanghai reported plummeting registered inventories and frantically hiked margins to no avail, a silent drain was occurring. By January 30th, on the very day the price crashed 40% in a single dramatic collapse, not only had the silver shares outstanding bottomed at roughly 550 million, but the silver lease rate in London hit zero exactly on the same day. The connection is undeniable and damning. As the price rose relentlessly, because went down and bounced off, 35 million ounces of silver were physically drained out of the vault. This metal was the only available buffer left in the financial system. Bullion banks facing catastrophic delivery failures on their month-end contracts were buying SLV shares on the open market, redeeming them for baskets of physical bars, and using those bars to meet their immediate obligations in London, where the physical bars of SLV are held in custody. This desperate action artificially suppressed the lease rate by creating a temporary artificial source of supply, and it allowed the paper price on COMEX to maintain a fragile structure. But it was a vampire move, sucking the lifeblood from one part of the system to keep another on life support. You know, isn't it awesome? Do market analysis so often that, and we got to read Atlas Shrugged. Isn't it so hilarious to watch it happen in real time? And that's kind of why I didn't have a whole lot to say about silver yet, was because I hadn't read his article on what happened with silver yet, because he only just wrote it today, or like yesterday rather, last night. So we are going through this because I didn't know. I didn't know what the heck had happened. This guy always knows what happened. Where are we at next? Vampire move. Here we go. We're watching it, aren't we? Atlas be shrugging. Let's just use no, oh my gosh. And increase the Ponzi scheme by yet another 10%. Let's just do it. That way we've got physical silver. In the days following the crash, silver shares outstanding rebounded to 580 million because of strong demand. The banks had to return the metal they had effectively drained in January. The direct consequence of this scramble to refill the ETF: lease rates in London, where the bars are stored, just to have spiked to their highest level since the LBMA's near-death experience in October. I believe that the sharp jump in lease rates on Friday is the canary in the coal mine, warning about an incredible spike in silver prices brewing to unfold all of a sudden. Manipulation can distort price, but it cannot print physical metal. While the charts and exploits tell a story of desperation, the cold, hard inventory data emerging for the critical March delivery month paints an apocalyptic picture of mathematical inevitability. It reveals a market where paper claims to silver now utterly overwhelm the physical reality to a degree never before witnessed. The warning shot is being fired right now in February. In just the first 6 trading days of this month, an astonishing 98% of the open interest stood for immediate physical delivery. Buyers are not rolling their contracts forward for future speculation. They're screaming, deliver it, with unprecedented unity. To provide context, in the entire month of February 2025, a total of 24 million ounces were physically settled. We have already reached 20 million ounces in less than a week, a pace that signals a fundamental loss of faith in paper settlements. Dum, da, da, da. Are the tremors of increasing intensity of the past months merely a precursor to the March earthquake? The trajectory of deliveries shows a hyperbolic curve, lending to a point of systemic failure. In March 2024, approximately 27 million ounces were delivered. By March 2025, that figure had exploded to roughly 80 million ounces, a threefold increase that should have shaken the system to its core. Now, look to March 2026. The open interest for the month stands at over 400 million ounces. Let's just 5x it now. Stacked against this mountain of paper promises. That's it. They're just pieces of paper. It's the COMEX registered stock. The silver actually sitting in its vaults and approved for delivery. You know, I'm going to stop here for a second because I have to say, because it just came into my mind. Can anybody now start to maybe just a little bit, maybe start to relate to Hitler? Is there a point at which maybe we could just potentially entertain the idea that maybe he was onto something? No. Let's just do it again 80 years later. 80 years later. What? No. Yeah. Let's just do it again 80 years later, 85 years. People. What are your thoughts? Audrey Lynn, as you're hearing this, I'm gonna pick that paragraph back up, but I mean already, this is insane, isn't it? Oh, your microphone's not working. Check 1, 2. I still don't hear anything. Maybe try refreshing or I know that phone sometimes doesn't connect. Yes.
Can you hear me now?
Yeah.
Yeah. Okay. Crazy thing. What I am thinking as you're reading this. First of all, I always thought that if I were to get silver, it would be in my hand. Thank you very much. And not in the bank's vault or some such thing. You know, if I had to, I'd go bury it in a quote unquote backyard and hope for a really big backyard.
Yep.
um, uh, when you earlier said something about that that where these bars came from was the last reserve or the last resource, I thought to myself, there's going to be more of this, and they won't be able to stop it.
Mm-mm.
And then people with pitchforks might be hunting down their addresses and giving them a visit.
Yep. Oh my gosh. And just think of all those people in Alberta. Oh, they're just like, we need to join Trump. Oh my God. Oh my God.
Yeah, it is actually really difficult to read through some of my Telegram channels as they just effluse, so that's falling all over themselves to love on Trump, and he's our savior and whatnot. And it's like, don't be so careful of that. So that mindset that someone's saving you, because there's always a price. Or usually,
Yes.
usually
It's
the price.
pronounced opium for a reason.
Yep.
Yeah. Okay. $400 million ounces. Stacked against this mountain of paper promises is the COMEX registered stock, the silver, actually sitting in its vaults and approved for delivery, which amounts to just 103 million ounces. The calculus of collapse is simple and brutal. If just 25% of the margin open interest, a conservative 100 million ounces, stands for delivery, given the current trend, the COMEX will run out of metal. If the year-on-year growth trend continues, demand could reach 240 million ounces. At that point, the COMEX, the world's largest silver futures exchange, would fail to perform its primary function. Oh my gosh, you just have to laugh and cough at the same time.
Yes.
Okay. Next. Beware, this inventory black hole is a global phenomenon, leaving no room for a coordinated rescue. That in China, the combined silver holdings of the SHFE and SGEE exchanges, those are their versions of their stock markets, have dwindled to less than 30 million ounces as its industrial machine voraciously consumes any available supply. Told you, those chips, they are expensive. In London, the heart of the opaque over-the-counter market, best estimates suggest a free float of perhaps 150 million ounces. But this pool is under severe and continuous strain. The conclusion is inescapable. The entire global system of paper silver settlement, is facing an imminent synchronized inventory heart attack. I love being right. The bank's January exploit bought them time, maybe 3 weeks. Did not solve the problem. It made it more acute by proving to every industrial user and sovereign buyer on the planet that the system is predatory and that the physical metal must be secured now at any cost.
When it comes down, it's going to be brutal.
I'm just so glad that it's so obvious. Like it's not even like, we told you it was going to happen, and then you experience the thing that happens, and you're like, oh yeah, I guess, ha ha ha. But it's like, no. Just read how this is getting played out, and really sit with the level of theft that this is. And then ask again, and then ask again whether or not Hitler might have been onto something about getting a specific demographic of being out of its banking system, of Germany's banking system. It might have been something really, really terrible. I mean, this is the worst that has ever happened. This is the greatest theft ever. No one's been able to accomplish something this big. It's kind of like the Trump called it the greatest achievement, military accomplishment, the greatest military accomplishment. That's what he referenced COVID.
Oh.
On record saying it.
Wow.
It's kind of the same thing. This is the greatest accomplishment that the usury banking system has ever achieved. The bank's January exploit bought them time, maybe 3 weeks. But it did not solve the problem. It made it more acute by proving to every industrial user and sovereign buyer on the planet that this system is predatory and that the physical metal must be secured at any cost. We already said that. Why the silver spike might dwarf the London nickel crisis. The 2022 LME nickel crisis is the essential playbook for what unfolds when paper markets divorce from physical reality. It involved large, concentrated short positions facing a sudden surge in demand for physical delivery. The shorts could not cover, and the price went parabolic until the exchange authorities stepped in to cancel trade, sacrificing market integrity to save the shorts from annihilation. Silver is following the same script, but with critical, more dangerous twists that guarantee a far greater explosion. First, consider the scale and systemic importance. Nickel is a significant but niche industrial metal with a market valued in the tens of billions. Silver is a foundational monetary and industrial metal with a derivatives market valued in the trillions. Touching unallocated bank accounts, ETFs, and countless industrial supply chains. Second, the nature of the short position is fundamentally different. In nickel, the short was a single large player. In silver, the short is the core mechanism of the bullion banking model itself. The entire structure of fractional reserve paper trading, selling more promises on metal than can actually exist, constitutes the aggregate short position. Unwinding this is not about bankrupting one firm. It's about dismantling a 50-year-old market architecture that has undermined the basis for global price discovery. Yeah. It's like We've been using this to determine the price of silver for 50 years. Why would you make it? Why would you tell everybody that you didn't want them to trust you anymore?
Yeah. You got a good thing going.
I think they got caught. I think they got caught with their hands in the cookie jar, and now they're just bolting. That's what I think.
Oh, that's a possibility.
You know what I mean? Like, why would you do that? You're not going to get away with that.
Greed.
Third, while nickel demand is largely industrial, silver demand is a perfect storm of industrial consumption from solar panels, electronics, electric vehicles, combined with relentless investment demand for coins and bars. And now, increasing monetary demand from central banks seeking reserve diversification. Yeah. All over the world, national banks are like, I guess we better be buying some silver if that's what's going to be the currency of the merchants. Duh. Going back to nature. This demand surge comes from every vector simultaneously, and none of it will stop because an exchange in New York hikes margin requirements. Factories do not run on margin calls. Finally, there is no mystery buffer left to discover. In the nickel crisis, there was fleeting hope that hidden stockpiles might appear. In silver, every major vault is audited, tracked, and visibly draining in real time. There is no unknown sovereign hoard waiting to save the day. The raid on the silver proved that the last known liquid buffer of bullion has already been weaponized. The final warning. January 30th crash was not a victory for the shorts. It was a confession of guilt and a panic attack by a cartel that finally sees the abyss. Remember how we were looking at the chart? We were looking at this chart for a while. I'm going to bring this up at this point because we've been watching this. I'm going to go to the 4-hour chart. We watched this in a very, very detailed form. We saw this. I said, oh, look, double top. We'll see what happens. This is going to be consolidating now. We consolidated, and then we just blew up past that all-time high. It went up, and this is where they started the robbery with those shorts.
Ah.
Now you recall. Now we've looked at this now a few times. You can now see how this pattern played out. This was the theft.
Yeah.
Because all they did was that they went ahead and sold all those paper contracts at the super high price, only to see their shorts finally take, oh, there's the target. I said, oh, look, it's probably come back down, coming down here when it dipped. I said, yeah, it came down here because this was the last area where the most volume was. Whenever you see pivot points like that, that's high volume.
Yeah.
So it came right down to the volume levels where the activity was most. So yeah, we just watched that in slow motion. I visualized this 2 years ago when I first started market analysis. I envisioned that we would be watching it occur in real time. It is like musical notes. Everybody dance.
Yeah.
They dance. Look at them. Look at how they did it too. It's like it is like artwork because look at all these lines, right? Like this one here. There was that high, right? And when it dipped down, it went down to the other pivot point down here. And then it went up and hit this pivot, this high volume area, and then it went back down again. And then it went all the way and hit this old-time trend line. And then it's like it's almost like I put these lines on here for a reason, is so that we can see the patterns. And it's just predictable, even many times, 60% of the time, if you're really good, if you calm down. But look at after that hit the trend line, it came back up and look, it bumped up against that old spot. It just does it over and over and over again. And Maureen made it. Hey. So, yeah. That's what's going on with silver. The Wing Riders.
Maureen, you're muted.
I said, I was interested in what happened with silver.
Oh, yeah. Oh, you missed it. I
missed it. That's it. Forget it.
Yeah, that's over. No, well, you make sure you watch the replay because it is a good one. We read through this article. One of the reasons why I didn't have a whole lot to say about silver was because he hadn't given me an update yet. It's not like I know this shit. I just parrot. I'm just a parrot. Blah 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 blah.
Well, that's the way it is. It's the chain of command. It's the chain of parroting.
Yeah.
It's who's got on our little bird app. It shows, what are they called? Wild, the Amazon jungle fowl. Amazon jungle fowl.
Chicken.
Oh, that's a chicken. Oh, okay. Anyway, good. So we're going to listen. And how do I listen, Paul? Where do I go to listen?
Oh, it'll be on the website. It'll be on the website, and let's make sure that you got that connected.
Okay.
Yeah.
All right. Okay. So go ahead. That's all I need to just get. I need to get connected to your website. It's the same, right?
I can. Yep. Absolutely.
Okay. Hold on.
Yep. We set that. Remember when we set the contract up in your wallet a couple weeks ago?
In my wallet. Oh God, I can't go to that. I don't even know where that is.
We'll go to
it. Now I'm like, all I am is right here at your website. What is it Man Known as Paul?
ManKnownAsPaul.com, yes.
Oh, Classroom. It's not Classroom though, right? It's just Man Known as
No. That's the Classroom is where you are right now.
That's where I am right now. Well, that's good. Okay, so now here we go. Connect. Let's see. Beat the WEF at tokenizing everything. Okay.
Yeah. So once this is done, once I process this video, it'll be up. The replay will be up there.
Okay, so it's connect your wallet. I don't need to do that. So it will be on here and it will be under Clausus, right?
Yeah, you bet.
Okay, so it will go all posts and it will be right there. Okay, so I'll just leave that up. Okay, so now I'll go back here. All right, so.
All right, so I can do a little bit of an update because I see Ron's there too. The big price drop that we had, it was outright theft, and they were caught red-handed doing it in real time.
Oh my God.
They literally stole. They literally hauled off. They hauled off, what was it? 40 million ounces of silver.
Yeah, something like that.
The calculus of collapse is simple and brutal.
Yep.
I like that. Wow. So who's they? Who's the they in this case?
Oh, well, the same banking elite that always does it every single time for millennia. This is their matrix program. Remember, it's like it's like the architect in the Matrix where he says, we've gone through this process so many times. It's the they that everybody rolls their eyes at whenever we mention it.
It's when I say, well, they did this, and then people go, leave me, who's they? And I go,
Who is it?
I don't know.
You
Who's
know,
John Galt?
They.
who is John Galt? Yeah.
Acronym. It should be, the elite. Wait a minute. The horrendous elite yields or something like that.
Something. I'm simply going down to the adversary now. I can't really get it any other way.
Okay, wait a minute, because I'm going to do some tuning with this because I think it's important. I'll be right back.
I agree. We love our enemies, but they are our adversary. Yeah.
Ooh, nice tone. There we go. We just came back from our teacher, so I'm all jazzed on toning again, tuning. So go ahead. Whoops! I'll mute myself here.
Okay. Awesome. Well, yeah. Let's go on. That is silver. Gold. We noticed that the lows are not behaving the same as silver. Yeah, because what happened with silver was did not occur with gold. And so it's behaving a little bit more normally after we see some volatility. Now, yeah, I would imagine that there was a bunch of shaving going on with the futures, of course. The paper contracts would have benefited greatly from that. But we can see that it's been consolidating itself, which just means that energy is dissipating, the energy from that particular volatility. And we'll see that likely continue to rise. Gold silver ratios, a little bit of a drop there. We had the Thursday, the high was 67 ounces. And it's now dropped down, seeming to find some support right now at 61 ounces. Look at how off I was with I think I'm going to do something like this. But again, this is a little different. It's a ratio. It's not really a price chart. Like when we're looking at price charts, we use lines and stuff like that to give us trends and that kind of thing. That wasn't really a price chart. Japanese markets. There was something too that Dario had said a couple days ago about the Japanese markets where there was people going to jail. Like it was like, whoa, you don't do that, and they were reported right away, and they were taken to jail. Yep. Yeah. So there's that. US 30 still climbing, even today, creating another all-time high. Crazy. Let's go check out the how things are panning out for. Wow, that was weird. See how things are panning out here for the daily chart on this. And we take the price. Remember, it's always the price of the market, the index, 50,196, divided by gold, 62. We're probably going to see another little drop, I think. Oops, I did that totally wrong. 50,199 divided by gold, 5014. There we go. Oh no, look at that. It did get cheaper still. Went down 0.8 of an ounce. Into the crypto markets, we have Bitcoin dominance, which we're paying attention to for alt season purposes. And we can see that dominance dropped back on Thursday. And, on Friday, it managed to recover somewhat, but it is not doing well In that, we can see it is staying underneath that longer term trend line. We intersected that back from, oh yeah, how far back does that trend line go? July 2023. So that is a very significant loss for the chart on Bitcoin dominance. If you recall, as we were seeing these lows get higher from November, we saw that those lows getting higher. We saw that as consolidation and how that energy builds up as time goes on, right? Well, this is that start of that breakout. So we came down and that low, it went lower than this previous low here, not by much, but that's an indication. That simply means a lot of strength is coming from those bears. So we'll see as time goes on if this trend line can't maintain the resistance. It might come back up, but I think it'll do a great job at providing resistance. Let's go on to Monero. Back down again. Didn't actually turn out to be a whole lot of action. It's come back down to almost the previous lows. It is staying higher, though. We do have another trend line here to be paying attention to. Let's move up to Ethereum. I don't know why my Monero is way down there. Ethereum also seeing some lows form up there last week. And go to a 4-hour chart so we can see, sure enough, it's bumping up against some resistance from the S5 line. If it can't stay above this trend line here, I'll be shifting all these pivot points downwards. We might be going down a little bit further. If we go to the daily chart, we can see that we haven't broken market structure in the slightest. In fact, market structures at April 2025, almost a year ago, that market structure is going to be, I would say that that's got to have a lot of support, because you think down in April 2025, remember this is when they started up the ETF program, January 2024. They were selling ETFs at these high prices, just like they were doing with the silver. And then what they did was that they would turn around and actually buy the Ethereum when it came down here. So this market structure is pretty strong. They already bought. And then, of course, now they're looking to do it again. So, and this trend line here is definitely going to provide some support.
What's the arrow? You have an arrow there, Paul?
Yeah, this arrow here.
That was where they started doing the ETFs?
That's when they started issuing the ETFs, yep, okay. Where the paper contracts on the digital silver. Thank you for that. Midnight. Let's go check it out. 2-hour chart here, because we're still fairly small, fairly young. We can see that it is at a low here. This low here from the February 5th saw a nice rally, and it came back up and tested these old lines over that we saw as support back in the day. So we'll see what happens here. This coming up this far doesn't really show us a lot of strength. We would need to see midnight get above this line and retest it from above. So right now, it looks like it would be going down, still continuing a downward trend. The other thing is, though, this is a pretty significant. If it was to continue that trend, you can see that those highs don't usually get higher. And here, this is a higher high. On that 2-hour chart, though, it's so hard to tell. And it's such a young coin. ADA, hovering currently at 26 cents US. Very low. Gonna have to move my pivot points, I can tell. Last time we were this low was all the way in October of 2023. That is low. In fact, we broke that market structure look at that. We broke this old AB. Wow. So that makes it now where we've got even more growth. No, that's an ABCD there. We are at there. This is a reversal. We are technically in a reversal right now. What do you know? Ha! Wow.
Find a reversal again.
Oh, it means that, well, we broke the market structure. We've talked about that ABCD principle. We can zoom in on this actually. Let's go to the 4-hour chart. So that ABCD principle is that the market moves from one point to one higher and then lower, but maybe not all the way down. And then again, the extension goes higher. Well, that principle is what we follow as a trend. That's like a confirmation that there is a trend. But when that structure, let's say, for instance, we have a structure here that says AB. Well, it's technically not that way. It's, let's go with, how do I show this but better? What chart do I use to do this? Oh, you know what? We can use gold because this one has got some ABs on it, I think. Oh, that's gold, silver. No, I don't have them, but I can do this. Okay. So we've talked about market structure being like where this is A, right? And this is, oops. This is A, and then we have B up here. And then C is this point here. This market structure, it is how we determine whether or not we're actually trending or not. And if we're not trending, then we don't trade. That's kind of the rule of thumb. So this trend is that ABC. Oh, come on, D. There we go. ABCD. But that is the market structure. C is currently the kind of the base of that. If we don't go above D, we're still just waiting for the next extension, right? So we're sitting here. Oh no, sorry. I should say this extension makes it where this becomes A. So now we have A and B, and we're waiting to see where C is. Oh, here's C here. Oh, C went a little bit further, but it didn't go down as far as A. It just went down a little bit more. And then it goes up. And then we can see, okay, nope, now we're actually creating a new high. So now we have to move this up to D. And we continue on. And it moves and it moves and it moves. This is a gold chart, so it's not going to work against me. But where can I? Here we go. Let's do this. So a reversal is, in technical analysis, where we have an A and we have a B and the market comes back and we even get a C right here, the first one. And then it comes back down a little bit lower, doesn't go past A. And then, oh, look at this. The price goes and breaks the A structure. It goes and creates a lower low than A. So that's what we call a reversal, where we were looking for a trend and we broke market structure. Now we have to flip the whole thing upside down. And we go from A to B to C, and then we go to D. And actually it's more so like this. Yeah, because here, no, sorry, A, B, C, right? Yeah. And then D. And then we can see, why does it not update? That's weird. So then we can see A, B, C, D, and then it comes up. Now we got to move everything down because we keep on going. So now that's A, B, C, D. And then it's another one. And these are the waves that we're watching for. And we just look and we scan and find those highs and those lows in that pattern, and we move them around so that we can see, okay, where are we at? Well, we finished this trend. This trend got finished. And then we had A, B, C, right? And we're waiting for D now.
A, B, C, D, E, F, G. No.
Yeah. So yeah, there's A, B, C, and we're waiting for D, but B gets retested, and then this comes up, and then we have to move C, right? And so we wait, and we have to move C a little bit more, and then all of a sudden, no, now it's actually here. Yeah, here already. It's now breaking above the old A. So that breaks the market structure, and we got to flip around again because now we're bullish. So A gets put down here, B is here, and so on. C was nice and quick here, eh? And then D ended up being way up here because that impulse just didn't stop. It just kept on going. So yeah, does that help you get a sense of what a reversal is? Going back to ADA, we have to look at the weekly chart, and that will help. So this low that we just got now, I'm going to get rid of these because there's not much point in analyzing this. So these lows that we're now pressing, the last time we were this low was way back at this location here. And I had marked AB, and we were tracking C this whole time. No, we're not tracking C anymore. We broke market structure. This is a reversal. We haven't been this low since 2023, October 2023. Before we even started market analysis. So there we are. We're at 26 cents right now. And remember, folks, most of the money is made in recovery.
At the bottom. So tell me, when did you begin market analysis?
I started market analysis in regularly. I was doing a couple like in May of 2024. And then big time into June is when it's full on every single day did market analysis. And back then it was at 7:30 in the mornings.
Yes, I remember when it was 7:30. But that was 6:30 our time. So it was like,
yeah.
Hey, I did want to say something just for the next couple of weeks. Well, actually, not even a couple of weeks. What is it? The 10th today. So on the 17th, a week from today, there is a partial eclipse, or I don't know what you call it. I think it's a partial eclipse, and it will be in Aquarius. And I think it's in Aquarius. I should probably. The 20th is a new moon, so maybe it's not in Aquarius. Maybe it's in Capricorn. But what's happening is that it's such a level of choice and of discrimination and choosing, in the sense of consciously choosing and not coming from a default pattern. And especially the 20th, when Saturn enters Aries and conjuncts Neptune, it's like really, it's such an important time. And I just want to bring awareness to the planting of the seeds, the whole new year. Plus, I think in this next week, the Chinese New Year is going to the fire horse from the, I don't know what it's the groundhog or something, some kind of like obscure animal, to the fire horse, is like, all of these signs of this mass explosion or expansion. So to be so aware of, at least set an intention for me to be so aware of the choices that we're making. And say if we get angry, say, I choose to be angry. I choose to really be, to make it conscious, No matter, I choose now, I'll calm down. Mm-hmm. So, whatever it is, consciousness and the conscious is so important right now. So I just want to emphasize that. And so whatever we do, if we buy, sell, whatever, A, B, C, D, if in a reversal or whatever it is, to just be a conscious choice. I don't think it matters what it is as long as we do it consciously.
Yep. I know that's the what speaks to that is that principle that I learned from Joe Schroeder, which is the currency of intent. That's what we're looking to transmute, right? And if the intent is something that is to, like what Ian talks about is, the transactional life, where we have to do this in order to, those are states in which we do not want to be making rash choices. We do not want to be making choices at all from that state.
Well, the woman, her name is Karen, and we just talked about one of her big things is want and need, and I want to do this, or I choose to do this, or even to use language instead of putting the I want in front of it, because I know you guys know this, but I'm just saying it out loud again about coming from lack. I need this, I want this. It's as if I don't have everything, and it's coming from the pain body, or Eckhart Tolle would maybe talk about it like that. But when you choose, it's like it brings a totally different frequency into it, and it's just to choose what you're doing. I remember doing dog training, and whatever the dog would do, I'd go sit. If it was sitting, I'd go sit. If it was barking, I'd go bark. That kind of, when you find yourself doing something, you just go, okay, I want it. Well, look at, I have to catch myself. And it is a choice to be alert to the signals that you're sending your whole, what she calls the biosphere or the field, whatever words you want to use on it. Anyway, you caught me in my wave. I'm still, she really communicates with Ron. It's really beautiful to see, because she's this wounded healer, and she opens caverns in him of receptivity and inspiration. And I just look at him and see how he responds to her. It is so beautiful to see. I perform a different kind of opening for him in his life. But I'm important too. But she is opening up something that only she has the key to, and with no attachment to it. No, she's not interested in having him as a lover or anything like that. It's just plain beingness, being to being, and it's really beautiful to see.
So, thank you so much, Maureen. Thank you so much for sharing. Other coins to quickly touch base with, given that we are in alt, I believe we are headed into alt season. Just wanted to touch base on a few more charts and close things off. We're getting close to the hour, I think. Oh, we're at the hour. Yeah. Just go through these other ones real quick. Unless you have other questions, unless there's something else more interesting. But this is where we are. XRP also breaking that ABC. So we had this D extension, but it's arguable that was really just another press against this thing here, because it didn't create like a new high. So we saw this kind of thing happen with other coins and other assets, silver even, where it goes a little bit higher, but it's not technically a high because we don't end up using it as support. So it came back down, and right now we're actually, just looks to me like we're just tracking a new C on this one. This one here is going to be key for people who are coming into cryptos. A lot of people are being encouraged to get this as one of the the main tokens to facilitate easier transfer back and forth between their banks.
I like it that you say its function when you do it. Then it kind of solidifies it.
Yeah. Yeah. I know I very seldom even remember the names of coins. But then when I go to the page and, oh yeah, I know all about that coin. I gotta steer clear of this thing. No wonder I forgot what it was called.
I do have a question about Bitcoin. Why, we know why silver is plummeting, but why is Bitcoin plummeting?
Oh,
or have you covered that in the half hour?
Great question. Yeah, great question. We actually have a reversal forming at the moment where we are looking at the ABCD across the weekly trend, right? And so this whole movement here, oh, wait a minute. No, there we go. ABCD on the weekly chart. So with this, what we're seeing right now is really just a retest of A. And what we saw was a reversal on the daily chart. Because we were thinking that we were, A, B, C, D to, sorry, where did we have this marked? I can't remember, but this daily definitely broke the market structure, and now we've created a D. So now why has it gone down? Why is it continuing to go down? Well, what happens when people are in a state of fear, it accelerates. And so this is in a little bit more zoomed in than on the weekly chart. This is the 4-hour chart. This ABCD is really just the first test coming off of the all-time high. So they're saying, oh no, look, Bitcoin's down. It's like, wait a second. You are only one Elliott wave from the very top that you've ever been. This is natural. This is normal. And it's also at this point here where we say it's 50-50. We've got no idea. We say in a statistical term, because that's all it boils down to in technical trading. And the reason why is because if you don't have your success rate in your strategy, then you can't do money management. You can't manage your positions and the equity that's being held in those positions. So when we see this, we're like, yeah, 50-50. We could continue. It's not 60-40 anymore. We could continue going down this trend. But equally as possible, we could reverse again. That's entirely possible. And so right now, we're just simply waiting to see, are we going to consolidate between C and D for a bit? Probably. It's a pretty good drop between C and D. That was 37%. I would say that, unless there's a really, really terrible thing that happens, like COVID 2.0, more on that later, then we could very well be continuing to drop. Why? Because typically speaking, when we see this kind of acceleration, like the last time this kind of drop, this is 33%. The last time it dropped 33%, oof, it took, look at that, that's 32. From the top down, 35%. It took 33%. It took 45 days to go down 33%. This time, it only took 20.
Ooh,
so much, much faster to go down in the same value. Don't look so much at dollar amounts. Look more so in ranges, percentages, points, because that gives you a better idea of what's happening. Like, this was a very, very sudden drop. So this is people panicking. Why? Because America looks like it's going to war. And so whenever that happens, people start doing things like getting dollars because they don't want to have the thing that they're holding lose so much value. They don't want to see the volatility. So they go back to what they know is safe. The dollar is so safe. And so that's what's happening here. People are selling things off in a panic because somebody on the internet, of course, after they saw B, someone on the internet said, oh no, we're going to be going down. And then they got scared when Trump was going to, because that's when Trump was talking about going to war at the end of January. He's going to send a bigger armada to Iran than he sent to Venezuela. I think it's just so funny how the reality TV show was named The Apprentice. Why do you think it was called The Apprentice? I think everybody thought that it was because it was of a group of people who were apprenticing. But no, it was The Apprentice, not The Apprentices. It was because Trump was he was going through his apprenticeship to be the reality TV show star for the Great Reset.
Uh-huh. I can see that.
And the reason why we're still having to talk about it is because there are enough people who think it's real. Oh. Yeah. Bitcoin went down because of that. Silver, same thing. There were people who panic sold silver as well. I had a conversation with someone, I'm not going to say who, but they bought it 100 and 104 or something like that. And when it dropped, they felt like they had failed. They're okay now because I explained to them, remember where we are in this thing. This is just the very, very base. We only were just tempting the 1980 highs back in November. The highs from 1980 were crossed in November. So we're just getting started. If you bought here, you didn't do anything different than what I did first buying gold in 2011 when it was at this high. It had never been that high before. Look at that. It had never been that high before. Look at that. It's like a hockey stick here from December of 2001. Got the early 2000s there, and then it's like a hockey stick curve going up. How much is this? Look at that, 570%. And that takes us to 2011 when I bought. That's when I started buying. Did I buy at the wrong time? Yes. Don't do what I did. I did the same thing. I waited until, too late. But it wasn't really. It was 2009 is when I found out just what was going on with the financial system. And I sorted my life out enough that by the time it's 2011, I was able to actually put some money aside and get some gold. So I don't think that I made the wrong choice at all. Now, I wasn't doing it out of fear that I was going to, it was a little bit fearful because it was like, I want to have this for the future. I see what the digital ID is. I want to make sure that I'm set up for this. And I did. I lost miserably. In fact, it wasn't until I want to say, I don't even think I started profiting from all of my investments in gold until I started buying again in like 2018, 2019.
I just
I
want
bought,
to, I want to reframe all that, Paul, and just say that you chose to get into the market when you could.
yeah,
You chose that, and
that's right.
and here you're still in the market. You've learned a lot. You've learned cycle. It's invaluable. That like talk about tuition. What you've learned is able to move through this without a lot of fear. These
Yeah,
different cycles, and you have the experience of losing, and you know what it's like, and you know
yeah,
how to out what do you call it, outweighed it, or what do you call that, when you can go through it with patience, in the sense of, oh, okay, it's going to change, and watching it change, and then
yeah.
having a vested interest in how does it change. So you wouldn't
Mm,
have that if you didn't have all of that experience. So I just, and that's what life gives us. We don't even have to ask for it.
yeah, yeah. Thank you for that. And it's a wonderful reminder because I do sometimes get hard on myself.
Yeah, it's like what do we want to pay attention to?
Yeah,
You chose, and it's like I chose. I remember choosing to get into Bitcoin when it was 20,000,
yep,
and then I think it lost something, and everybody was going, oh, and then I joined them, oh, and then I got out, and
yep,
okay, lesson learned.
yep.
So I'm gonna, at least as long as I can, stay in. I'm eager to listen what you said about silver, though, so I'll look at that later today. I'm feeling really optimistic about this whole next week and the energetic kind of
Oh, we are in for
opportunity.
a wild ride.
Yeah, and
Yeah, yeah,
the choosing that is involved here, how to be at
yeah,
choice, and I choose to stay in the market and to stay. It's that dollar cost averaging. I choose to do that and kind of ride the
yeah.
wave of it. So anyway, there we are.
I have to share with you a unique win that is another kind of a sense of pride that I have, that I had some close friends that I got to know through that period of time in my life where I was rebuilding from tragedy. And this area here, you know, December,
Mm,
even as soon as September 2019, this is when I was with some of my closest friends saying, we're getting down to the wire here. You're going to need to get some precious metals. And they said, oh, okay, well, we like that idea, and let's go. And they did some research on it, and we worked together with the local gold dealer that I knew, and that was wonderful experience to be there for him in that.
yeah.
He just bought, and I don't remember what the dollar figure was, but I do remember that it was enough that I was thinking to myself, oh yeah, no, he'll be fine. Everything will be okay. He's good now for the rest of his life.
Mm,
And so it was at seven. Yeah, it was like easily $17, $18 US.
mm,
And he had forgotten how much he got. And he asked me, he's like, do you remember how much I got that day? He asked me this like about 2 months ago. Do you remember how much I
mhm.
got that day? 2 months ago, folks, that was the end of the year. We just finished going past the all-time high. Beginning of the year, we were already going up to 65, right? So he
Mhm.
was like, around Christmas time asking, it was around Christmas time. So, he's asking me around $60. Do you remember how much I got? Well, if he remembered, he would have known that he was up 258%.
Wow.
But that was when he talked to me at Christmas. I just saw him this weekend.
Mhm. Yeah.
I just saw him this weekend, and he counted he finally counted his shekels, and he was at 115 US.
Wow.
And so 115 US, he was up 553%.
Wow.
I feel vindicated. So we are, we're going to have some fun, I think, this next little while. It's just insane. That hockey stick curve that I showed you that I bought at the end of this one. Where is that? There. Yeah. I bought at the end of this hockey stick. Right? Oh, no. Wait a minute. Yeah. Right there. Well, the hockey stick that we're on now. Look at it.
Mm.
Right? Like this is sharp.
Wow.
Going back to gold.
Mm-hmm.
Oh yeah, this is what I was talking about. This is the hockey stick I was talking about.
Yeah.
Right? This here, that's 681%. Well, 681%. We have only from the most previous low, from this low here, we've only gone up 255%. So 600%. I got it. This is where I got it. This is why I go to the logarithmic, because otherwise I got to squish the chart down. The numbers don't fit. I got to go to this type so that I can see where we're headed. So 600%.
What is Dalios? What is Dal? Oh, I'm not muted. Oh, I'm so sorry. My eating.
No, that's okay. That's all right. This is 600% is
Wow.
$11,000 an ounce.
Paul, what does Dalio say about gold?
Well, he's really big into the whole computing AI infrastructure projects as well, right? So he's of the same mind that I am, and I basically got my ideas about, where we're headed with the new chips. Got it from him. But the new chips are going to make gold and silver irrelevant, and then people will be upside down in gold and silver because they didn't exit. Right? They're going to go ahead and they're going to buy gold at $10,000 an ounce. And then it's going to drop down to the all-time high of this year at 5,500. And they're going to be upset about that, right? And then it's going to do it again. We're going to see this happen in phases. That's what, his mindset is very much like mine. This is going to be another rug pull. Like, it's incredible to look at, and you just look at the full scope of this. The lows from here's the low from 99. 1,900%, almost 20 times. Oh, this is going to be monumental just because of how much the demand for gold and silver is going to go through the roof. Remember what earlier on, Dario was talking about how the silver, the industrialists who need silver, they don't stop buying silver. They just keep buying it. And then they just charge, like, that's part of the cost of the electronics, right? So they don't care what the price of silver is. They are buying it one way or the other. But the fact that they are going to have an estimated 6 times the demand that we normally would have, it's going to create a huge shortage on that metal. And that's why some people are stealing it. we're going to see the same kind of thing happen with gold, just at a lesser degree, because eventually countries are just going to be like, you can't keep doing this. It's what are you doing? Like, that is just the most ridiculous thing you could do. We're renegotiating our energy contracts without the US dollar, and we don't recognize anything you say about the price of gold anymore. And that's what's going to happen, especially if they continue.
What does that mean, Paul? They're not going to recognize what we say. So, is it like going from the 10 decimal system to like a 6 or a 12? Or, you know what I mean? A whole different paradigm, like what is gold and what is it worth? And
it is a whole new paradigm, because all of these countries are going to they're going to figure out a different means of exchange than the US dollar to denominate their energy. Already, we know that that's already been happening. Gaddafi, that's why he got sodomized by a bayonet, because he was not willing to do his oil. He's very rich oil. Libya is very rich in oil. And he wasn't willing to conduct his contracts with the US dollar because he didn't want to be a slave to it. He didn't want his people to be enslaved to it.
So instead, he's going to make it to gold. It's going to be bought in gold. But I don't understand, or show me how, or if you can, I don't even know if it could be explained, in my context.
Yeah, I think so. Here's how I would do that. Let me just get my chalkboard out, because this is a really good question. Oh, and I can see that I have to clear this. There we go. Okay, ask your question again, and I'll sit with it, and I will think this out with the chalkboard.
Okay, all right. So we've got the dollar going down as the medium of exchange.
Mm-hmm.
So what will happen? And gold is becoming like, okay, now we're going to ask our price in gold, but gold. What will gold be valued at, or what will be the equivalency in, like, say in Arabic, I don't know what their coin is. Gold will be worth X amount in their coin, but in the dollar will no longer have the relevance in a worldwide kind of situation. So will it be like going from a 10 decimal system to, a 6 system? I don't, numbers. I remember that mathematically that, we're on a 10 system, or it's like going from inches to metric, or from Celsius to Fahrenheit, just a different measuring system.
Yeah.
So does that?
Yeah. It definitely helps me a lot. So what we're seeing, this is a reset.
Mm-hmm.
And so right now, as it stands, energy is the commodity that nations sell to their citizens.
Okay.
They have to. That's the natural resources, right? This is how we can get the energy. They use oil, natural gas, all kinds of different crudes that can be refined. But it all boils down to forms of energy. Is it what they're doing? And as much as the windmills don't actually produce more energy than it takes to create them, they have an energy deficit. But during their lifetime, they do contribute energy to the grid, and we all pay for it dearly. The energy itself is the commodity that governments, so nation states in particular, are the nation states have to buy this stuff and have it available. And they need to, if they don't have a rich source of energy, they're going to have to buy it from a nation state that has an abundance.
Okay.
And so what has occurred from 1950
Mhm.
to 2020, sorry, not 1950, 1972
Yeah.
to 2022, that 50-year period was a contract. The contract was between USA and Saudi Arabia.
Mhm.
So Saudi Arabia says, "Oh yeah, we've got all this oil." USA says, "We want to buy your oil for 50 years for $4 a barrel. That's how much we want to pay for your energy." Saudi Arabia. And Saudi Arabia is like, "Ooh, that's really cheap." And we know that the prices are going to go up because you got a good inflation program. What's in it for us? Because $4 a barrel, that's pretty cheap. We can sell that for a lot more than that. And USA said, "Oh, well, in exchange for this 50-year contract, you can use the entire might of the United States military
Mm.
to secure your land and do whatever." So then they
Mm.
did. But they needed to create a reason for that military to be there. And so then there were all kinds of different, extremists and, the terrorists that were just trying to fight for their land, really, is what they were doing. But that, of course, we couldn't see that in the media. We had to see them as the enemy. And that way, Saudi Arabia could just dispatch the United States military wherever they wanted to squash a bug, so that they could maintain their dominance in the region with that US dollar. And all the countries were in on it. Oh, no, there wasn't. There was one actually that didn't like that at all. Oh, and then there was another one. Oh, and then there was another one. And so because they didn't want to do that, that was a big risk to the dollar. Now, the reason why is because they were the powerhouse of the global economy. They had just finished going through 2 world wars, recovering out of the 30s, going into World War II. That was an economic boom. Huge. In fact, it's said that other than gold, the commodity that was the commodity that built the US dollar before the 70s, before it was, depegged from gold, that it was actually backed simply by the war bonds that everybody managed to invest into. And so that created a global powerhouse of domination. You have to now do all your energy contracts. You got oil, you got to trade that with other countries using you can't do that privately between your two countries. No. You have to use the US dollar in order to trade oil with other countries. And Iran, 2014, they signed a $600 billion infrastructure bill with China for the Silk Road. And the deal was that China and Russia would actually be buying $600 billion worth of oil from Iran, but that it would not be purchased with US dollars. The deal was that this $600 billion, which was a 10-year infrastructure, by the way, a 10-year contract, that $600 billion was paid in gold by Russia and China. So that energy contract marked kind of like the first shot across the bow for the banking system that the United States has tolerated. That was like the shot across the bow, because then sure enough, contract was up in 2022 and everybody got mad at Biden for leaving the military out to dry. He didn't leave the military out to dry. It was the end of the contract. They weren't supposed to be there in the first place, but, then people started electing presidents and shit. So then the nation, I'm sorry, I shouldn't say like that, because people do vote with good intentions. So the nation states were all having to use that dollar. Well, now what is it about energy that we need it so much? I mean, what is it that we're doing that requires so much energy? Well, right now it's AI. Because AI, we have to increase the national supply of power by 6% this year.
Ooh, yes.
This year.
Yeah. Yeah.
Yeah. So
Yeah.
now power is the new energy around the world because
Yeah.
everybody's using AI. It's all
Yeah.
over the world.
Yeah.
Yeah. So this is the reset. They are simply redenominating energy. The commodity of energy is simply being represented by data. Period.
Mm.
That's why data is the most highest traded commodity on the planet right now, because it's now backing energy. Why? Because they can record how much you're using every time you go and pay attention to their reality TV show. Does that help? Does that land? Does that now make sense?
I'm just thinking of Musk and his new data center
Yep.
gaining new relevance. Yes.
What's your thoughts? Like what comes to you as you hear that? Does it? Yeah, because my intention is that comprehension of what's really at stake here is truly present for everybody.
It's comprehensive.
Yeah.
Much more comprehensive. I mean, certainly I never had any, I didn't think in those terms at all. And I'd want to hear it again so it could see. But what I'm thinking, how important something like cryptocurrency is, and the, not crypto, but the blockchain in the sense of the nodes and decentralization.
Yes.
How critical that is for energy production. Because
Yes.
it relies on the whole rather than on like what Elon Musk is doing, the farms or the, whatever, all of that. I don't even know what all of that is, but it's, again, they're trying to capture a monopoly.
Yep.
And
I think. Yep. They are. This data, that's everything to them. They need us to continue being addicted to our tech, because otherwise those energy contracts mean nothing. Like, we're not going to be consuming the energy, right? So this is why I think we're at this key point in a, and it's not a revolution at all. It's a renaissance, because a revolution means we're just going around in circles. No, this is a whole other springboard that we are launching off of here.
oh, wait, before you do, I love the revolution because to revolve.
Yes.
It's just to turn it upside and do the same old thing, but just to make it look new. Anyway, just a thought.
So, yeah, exactly. And, when it comes to the matrix itself, please, because it is a matrix, and it's pervasive. It sticks around. It's very clingy to our experience. But just remember that what we can do with blockchain is simply an extension of what we've always been able to do. And it is such a beautiful world that, in fact, they're in it, because anything is possible. When everybody has that self-sovereignty and exercises that self-governance over their data, everything's fine again. There's no danger, in fact, but that you have unlimited potential, the horizons of possibilities. When you privatize that data and you start working together, there are going to be 3 types of people in the other realm. Okay, it's going to be 2. They're going to be parallel. You're literally going to be invisible in their world in so many ways. You could literally pass through walls. according to them, you will be passing through walls. In the impossible will occur, because in their world there will only be 3 types of people. There's going to be people who, there's going to be the oligarchs, right? The people that are just in charge of the whole thing. They're the puppet masters, right? Then you're going to have the people that work for the oligarchs. And then the third type are going to be they're going to be like access points. They're going to be liaisons even, who are in that world, but they're not of it, and they know it, right? They are awake to what's going on, and they stay as ministers.
Liaison is spelled IA, but I think AI might be more appropriate if we just do AI. I mean, do you know what I'm saying?
Yeah.
I like that.
That's so good. I've done this too, where it's like, you remember Hal off of Space Odyssey?
I totally remember it.
Yeah,
I used to imitate him. I love that voice.
Yes. So Hal, right? I've done it like this, and I've said, "Oh, I actually go like this, A-L." So now looks like AI. But what I say is the H is silent. So it's just Al. Just to have fun with words.
Yeah, of course. We have to amuse ourselves.
But that's what I see. I see that there's going to be these 3 types of people in that society. And you're going to be here. The most probable you're going to be here, and that these are going to be the people that are they're going to be the outcasts. They're going to be underground. They're going to be digital. So they're going to have a completely different, it's a whole different internet. I don't know, sub-internet might be the word. Darknet. Darknet has a negative connotation to it.
Are the outcasts, is that OUTCA, or is it outtask?
Oh, thank you for that.
No, I just am wondering.
Not outcasts.
Yeah.
Yep. You know, it's like Robin Hood and his merry men were the outlaws, right?
Of course, that's as seen by the few special people in charge.
Yep.
That they're going to see that as. Okay.
So yeah.
Oh.
Thank you for that good question. That brought us to another half an hour of good content. Thank you very much.
All right. Well, thank you, Paul. And let's reschedule the hour. I don't know. This week I have my taxes that I have to, and I'm avoiding them right now, but I have to prepare.
Okay.
So I don't know what my time's going to look like, because it's going to be, what am I going to be able to get done, kind of thing.
Got it.
So we'll figure it out.
Yeah, absolutely.
All right. Take care. See you tomorrow.
You bet.
Bye-bye.
Bye for now.